Jefferies continues to maintain a buy rating on ICICI Bank with a target price of Rs 900 a share. The bank remains the top pick for the house in the financial services sector. Jefferies says that basis interactions with management, the business momentum for the bank has picked up, especially since the second wave has leveled out in June. One of the metrics for this is the fact that both the personal loans and the commercial vehicle space has seen a decent ramp up and is at now almost 80% of normal levels. Further, there has been a ramp up in the SME book for the bank, which Jefferies believes is going to drive the next phase of growth for ICICI Bank. And this growth and this momentum should help improve the margins for the bank, with the margins set to expand further. Also, another push on margins will be the improvement with regard to the credit costs for the bank. So both the growth engine as well as the credit costs improvement should push margins forward for the bank. Further, Jefferies estimates that slippages will continue to come down starting from the second quarter of this particular fiscal. So Q2 and Q3 should see a reasonable downtrend with regard to slippages and NPAs for the bank, and expects that restructuring, especially in the retail and SME book, will be limited to quarter 2. So quarter 2 will see some restructuring, and then slippages will start to taper in quarter 3 onwards. As regards the provisions, Jefferies says that the bank has a reasonably good provision buffer already in place, which is also a good positive for the bank. Now, one of the most important stories for ICICI Bank has been its digital foray. Of course, it has changed its image into a more tech-focused bank, a wholesale bank, and having great cross-selling opportunities. Doing well with regard to all its products, all across the board. All the financial services products are doing decently well for ICICI Bank. They are also open to tying up with fintechs, which should aid the bank. Now, all of these tailwinds will obviously see and will obviously translate to good bottom line growth for the bank. Also, as an example, its tie-up with Amazon with regard to Amazon's credit card with ICICI Bank has seen outstanding returns and has seen very, very good customer interest, and has also helped the retail segment of the bank. Now, with regard to its stock price, the stock price has been flat over the last 2 trading sessions. It closed at around 707 on Monday and was pretty much at the same price on Tuesday at close of trade. So this leaves a 25% upside potential for investors from the bank. Obviously, a very high conviction bet by Jefferies on ICICI Bank. Further, to just look at valuations, the price to earnings is currently at around 30, and Jefferies estimates that this will drop down to around 16 basis FY24 expected EPS. So EPS may almost double by FY24, which is largely positive. Good vibes coming from the bank, and Jefferies extremely positive on ICICI Bank.